Oh, welcome back to the Leadership Blend. I didn't know I was bringing it in.
I told you you're doing everything today. You're doing everything today.
This is the Leadership Blend podcast edition. I am Kyle Andrew, and this is
Ricardo D. Rice. That's Rice with a W.
right. So today we have a special guest. His name is Regional Jason Ford. He is a life insurance and COVID coach.
I'm a life insurance investment financial coach.
Right.
Broker.
Okay. And so, with everything going on with COVID and deaths are on the rise, life insurance is a necessity and something that we really need to begin to talk about. But before we get into that, I wanted to speak with you all about Brandon Bernard, who was killed by lethal injection last night.
What do you do?
Well, okay. You want to know what he did first?
Yeah,
what do you want to know? Okay, so he was 18 at the time of the crime. He was a part of an armed robbery. He approached a couple in Killeen, Texas, and they hijacked the car and they put the couple in the backseat. In the trunk of the vehicle. They took it to a place that was near a military base in Texas, and then the only part that Bernard had in the crime was that he set the car on fire. And so he's had
with people in it, or he just said
the couple was already dead inside of the car, but I guess to get rid of the evidence, he and the gentleman that he was committing the crime with set the car on fire.
Okay, wait. So I have questions.
Mm-hmm.
So what is his ethnicity?
He's black.
What were the people that died in the fire ethnicity?
They were white.
Okay, carry on. Carry on.
So he's had people advocating for him. His including Kim Kardashian. The jurors that sentenced him even were begging for his life to be spared. He was set to be put on lethal injection yesterday at 6 o'clock, but he didn't get persecuted until yesterday at 9:30. Kim worked really hard, as you know. She's trying to get her foot.
I try not to throw shade at Kim Kardashian. I really do.
She's doing great
but
things.
I try not to look. You drink the Kool-Aid, so I'm not about to do this with you. But I really try not to throw shade at Kim because it is a good work. But at the same token, I'm just trying to understand what is everybody else doing. The people who are supposed to be advocating and supposed to be on the front lines for this stuff. What are you guys doing? Like, I understand that she has celebrity on her side, but you guys are supposed to be freedom fighters on a day-to-day basis. Why are we having to sit around and wait for Kim Kardashian to show up and do what she does? Like, I'm just at a loss.
That's a good point, but sometimes people don't listen to people that don't have any influence.
Well, that's your job to make them listen.
How do you
Facts, conversations, like this conversation we're having today. Like you lead the charge in conversations, and you get those conversations in the right people's hands. That is not an excuse, Kyle. I don't ever hear you say that again. That is not an excuse.
I'm just saying.
Martin Luther King was not a celebrity in his day. He managed to leave a legacy that's 50 years old.
Now we live in a different world.
Actually, yes, it's a lot easier world because you can talk. You can put your voice anywhere. From Spotify to iHeart to YouTube to Facebook, you can put your voice anywhere. Now it's a little hard to stand out in the white noise, but if you have a just cause, there you have it. Not a good excuse.
I'm not saying it's an excuse. All I'm saying is that she's a great advocate, and she's trying.
Oh my God, you sound like a Kardashian. You sound like a Kardashian.
I find that kind of insulting.
You should, because it was not supposed to be a compliment. I just think the case is weird. Like I don't want to say this is a common story. It's not a common story, but it's like of all the things that happens in the world, how does this guy end up on death row for this? Like, there's so many other things that have been egregious that people are still walking around on. And I just...
Well, for one thing, he has been in prison since he was 18.
How old was he when he got executed?
He was in his 40s.
Jesus.
Exactly. And so in his time, he has shown good behavior. He's been a mentor to the inmates in, where he was locked up. He was locked up in Indiana, and that's where he was persecuted yesterday.
I feel like there's not a... see, this makes me... the legal side of me makes me question these things. It's like, okay, well, if that's the case, who... I lost my train of thought. Carry on. I lost my train of thought.
Well, that was all. I was just... We can stop it there and then go to our guest, or...
You're in charge. Have you thoroughly examined... I just feel like this boils down to the fact, once again, that he's black. So I guess that's my question. Have the people who've been advocating for him, has that been the argument that this case he was only on this road because he's black? Like, if this had been a white person that had burned black folks in a car, would he have been in jail for 20-something years and been put to death?
Well, no, there were people that were speaking of the mass shooter who shot up the church maybe I think 9 years ago.
In Charleston, or are we talking about another one?
The one they took to get a Burger King burger.
Wait, what? Wait, what?
There was a shooter who they got him and then they shot him. He shot the church up and then they took him to get a Burger King burger and he's still living. I'm not. His name is slipping my brain right now.
Oh,
But
I thought you were talking about the 9 in Charleston that got shot up that time, but you clearly talking about something else. You talking about Burger King and stuff. I don't. Which, you know, kudos to Burger King. I like a good Whopper and you know some good chicken fingers, but that's a bit much. That's a bit much. But this is the problem with having or not having a legal team to argue these cases. And the question becomes, was he tried by a jury of his peers? What did the jury look like? Were they all non-African Americans? Were there 6 African Americans? I'm curious to see what the jury was like that convicted him. Like, these are the kind of things that have to be called on the carpet and called into play. You know, was he tried by a jury of his peers? You know, what did his advocate look like? What was his lawyer? Like, how many conversations did he have with his lawyer? Like, it's not cool for people to sit in jail for 20-something years and then be executed for something that was a crime. But when you look at it on a grand scale, was it really that level of a crime? It becomes the question. And you know, I don't feel like people ask the right questions these days. You know, we just kind of go with the flow and was like, well, however the dice fall, that's how they fall. No, you have rights. And if those rights are not properly executed, then you deserve a mistrial or whatever, you know, the fail-safes are to ensure that you have a good trial and a fair trial. And now I'm curious about all these details, which I'm not going to ask you because I know you don't have them. So I'm not going to ask you all those details because I know you don't have them. You know how I get when you present a story.
Yes.
Especially a legal one. I want to know, like, what are the variables and all that good stuff. But I'm not going to ask you because, like I said, I know you. That's probably where you sit.
Okay.
So it's fine. But I do want to segue to the foolishness that's going on with this trying to stop the transition of power from Trump to Biden. So now more than 100 House representatives or Republicans are backing a Texas lawsuit asking the Supreme Court to overturn the results of the election in the states of Pennsylvania, Michigan, Wisconsin, and Georgia. All of the states named have issued blistering rebukes of the lawsuit, with Pennsylvania officials calling it a seditious abuse of the judicial process. There has been no evidence of widespread voter fraud in 2020 election, and all the states have already certified their election results. Other influential Republicans who oppose this legal gambit are invoking GOP principles against protecting states' rights, saying states should not interfere with other states' elections. Of course, it's still not clear what the Supreme Court is going to do. Okay, now I'm over it. I'm literally over it at this point. All 50 states have certified, which means, especially with Georgia, you won almost 3 times. I mean, you lost almost 3 times. Like, it's literally over. And the fact that you are trying to bog down the justice system, trying to overturn, which is actually an insult and really assault on democracy, now it really has become one. So now you're saying that in these key states, we want you to throw all those votes out and let's do the whole process again. That is not how this works. And the fact that the GOP is supporting this foolishness, 100 are supporting this foolishness, is a testament of why in January we need to vote to take the Senate, because this is absolute foolishness. Absolute foolishness.
Are you surprised?
Honestly, at this point, I am, because I really am, because I didn't realize they would go to these lengths to try to keep him in power. And it's one thing when it's a handful of Republicans saying, yeah, we support it, but 100 House Republicans at this point?
When I reflect back on the last 4 years and I see the antics that his supporters have taken part in, I'm not surprised. They literally see him as a god almost.
I mean, he's a demigod in the multiverse. I say this all the time. But to be to this capacity where now you're dragging this stuff into court. And like I tell people, the funny thing is when they're in court, they don't argue that there was fraud in the election. That's not what they're arguing in court. They do that in the court of public opinion. They don't do that in court. That's not the basis of these lawsuits in court, which should tell you right there's no validity to it, because you can't even argue it on the statute in court. And you know that. You just do this in the court of public opinion because people are so easily swayed, especially their base, which is beyond disgusting at this point. I'm really over it. Like, I need the Democratic Party. I don't know what they can do, but I need y'all to step it up, because right now it's just out of hand. And we're fastly approaching the end of December. It'll be January by the time we turn around. Are we still going to be fighting these insidious battles by the time we get to January? Like, I'm scared for
Probably up
Biden.
until Inauguration Day at this point.
I'm scared for Inauguration Day. I feel like Trump is going to show up with some kind of pistol or something and sit on the front with Melania sitting beside him, and like Trump Jr. I'm just very nervous about And it's not even external. It's internal. I'm just very nervous about it. I just need this to end. You lost. When Hillary lost, we took it and we went to have a seat. You guys have lost and you won't take it and go have a seat. Like, I don't understand what the end of this is.
Do you think he'll run in 2024?
I think he's going to be in jail in 2024. Because when I tell you, sister girl that's over New York, I can't remember her name, that's in New York, she waiting for him to step foot out of office. She ready. She got her facts ready. She ready to prosecute. She is ready. I want to call her Keisha, but that's not her name. But you know, Keisha's a black woman fighting name. Like Keisha, not Keisha Lance Bottoms, but I'm calling her Keisha. I can't remember her name. In New York is ready. She ready. She want all the smoke. She's ready. She's done press conferences and everything. She ready to get him. So once he stepped foot out of office, I don't know. Hell's gonna wait. He lift up his eyes because she ready and she not playing no games. But I digress. I digress.
All right, so we're going to change it and go over to our guest. Again, his name is Jason Ford, and he's going to educate us on some health insurance. So,
all right, exactly. You fired.
Okay,
You're fired.
Okay. I'm 25. All of this is new to me, so excuse my ignorance. I mean,
really?
At this point, I don't care. It is what it is.
Okay, let me segue. Okay, so today's guest, I've worked with him personally, and when I sat down with him in one sitting, my mind was blown because I really got to see a lot of the key elements that people use to really maintain and create generational wealth, and that is based off at a premise. Life insurance. And people, especially in our community, hear life insurance go, oh, God, I got time. It's the span of my life. No, because especially in a COVID environment, if you drop dead tomorrow, who's going to foot the bill for your funeral? And that's just at the basic. That's not even everything else that comes with it. So I thought it'd be an amazing thing to do to have a conversation about life insurance, the effects, what should you look for, what's in a contract, all those good things. So we're sitting here today, Mr. Jason Ford. How are you doing today, sir?
I'm doing great, Ricardo. How you doing?
I'm doing well. Now, he just told me this is his first podcast interview. I didn't know that. So we got to break him in today. But I can assure you guys he's going to be fine because he's the expert in this field. So Kyle actually did a good thing. Mm-hmm. So explain to us, and it's not so much explain, but we hear health insurance and we hear life insurance. Can you distinguish those two for us? I mean, it's pretty standard, but
right. So life insurance is needed when we pass away. Health insurance is to keep us healthy while we're still alive. That's basically what it means. Health insurance is while you're living. Life insurance you need to have in place when you pass away. You want to have something that you can pass on to your loved ones.
At the basis of life insurance, what should the basic cover outside of the funeral?
Yeah. So when it comes down to the life insurance, there's several things that should be covered in that particular policy. Outside of the funeral, you want to have enough to cover the mortgage that the family has been living in for so long. You want to make sure the mortgage is paid for. Also, you want to cover any debt that they have. So any student loans, credit card loans, car loans, you want to make sure that is covered in the life insurance policy because you don't want something to happen to the individual. And when they pass away, they come back and put a lien on the house that was just paid off. And that happened with one of my relatives where they were underinsured. We had to come up with money for the funeral, which we did, but they had so much debt that they put a lien on the house, and my family lost the house and didn't have a place to live. So you want to have enough to cover not only the funeral, cover the mortgage, cover any debt. And if you have little ones, have enough in place to cover their education. So I have 3 girls, 15, 13, and 5, and something happens to me, I still want them to go off to college. But if I pass away too soon, the life insurance is going to make sure they can still go off to school.
Oh, okay. Well, that's... So is this the kind of stuff you should ask or be asked when you sit down with an insurance agent? You know, what is your debt? Stuff like these are the kind of things you should be asked, or should you know?
That's what an agent should be asking you. And so I specialize in not only insurance, but also in investing as well. So I'm big on helping our communities create what I call generational wealth. And in order to create generational wealth, there's 3 principles to wealth that you must follow. It doesn't matter if someone works a 9 to 5, they own their own business, or they're lucky enough to win the lottery. If we don't follow these 3 principles, you will never create wealth. And the first principle to wealth is you want to save as much money as you can as fast as you can. So that's the first principle, save. The second principle to wealth, I call it good, and that stands for get out of debt as fast as you can. Because we have $50,000 saved, but then we also have $50,000 worth of student loans, credit card loans, and car loans. We have no money. But then the third and final principle of wealth, which is the topic we're talking about today, is you want to protect the wealth you have not yet created. So how do we protect the wealth we have not yet created? Yes, it's going to take time to save. It's going to take time to get out of debt. You protect your wealth by making sure you have adequate life insurance in place.
Okay, when you say save, are you talking about things like 401ks and things of that magnitude? You're talking about like a savings account.
Yeah. So when I'm talking about saving, I want you to put you in a position where you're saving enough money so that when you are ready to retire, you can live off the interest of your money. Okay, so putting in a savings account, checking account, when you're getting less than 1%, that's not going to help you save toward retirement. But when it comes down to your 401ks or things of that nature or outside retirement accounts, that's something I can help people to make sure you're investing in what we call the global economies. So the goal is to save up enough money, and that also leads to the life insurance piece, but you want to save up enough money so that you can live off the interest of that money when you retire. And retirement, to me, has nothing to do with an age. It just have everything to do with you having options, meaning you have enough money saved up where you don't have to go to work unless that's something you want to do, not because you have to go do it.
Yes, I'm not trying to be a Walmart greeter at 70. I'm just saying, I'm not knocking. I'm just saying that's not my plan. So you said it's not based on age. So what is a prime time to start if it's not based on age, or does it matter?
So when it comes down to the investing piece, you need to start now. So to create wealth, it takes time and you must be disciplined. Okay? It takes time and you must be disciplined. It doesn't matter how young or how old you are, you just need to start. So my youngest investor is my 5-year-old daughter. She started investing when she was 4.
Which is not fair because she has a hometown event. I just want to point that out. What you're not going to do is create her as a standard. We're not about to do that.
Well, then now my oldest investor is my 94-year-old grandmother, and she started investing with me when she was 92. So it's not too late. We just have to start. And that's one conversation we're not even having in our community. And a lot of people think, well, I got to have thousands and thousands of dollars just to invest. No, I can help someone invest money with as little as $25 a month. So it doesn't take long, and it doesn't take a lot. You just have to start.
Wait, stay there. So I'm sure just stay there. $25. How that work? How does that work?
That is real simple. So when it comes down to investing, you're investing to the global economy, but you can open up investment accounts, and I'm not going to go into too much details on how that works, but you can open up investment accounts, and you can start investing with as little as $25, literally $25.
I mean, is there something else go with it, or it's just $25? I mean,
it's $25,
I can do that.
And you'll be investing in what we call mutual funds.
So you're trying to pull me another way. That's not what
you're
trying to pull me another way. That's not what we're supposed to be talking about
today.
today.
So we just need to go back.
Stay focused, Jason. Stay focused.
Say it's my first time on a podcast.
I told you guys he's full of wealth. All right, so let's get back into life insurance. We will bring you back and we'll talk about mutual funds because we want to talk about that too. All right, so with life insurance, let's talk about terms.
Okay.
I had a conversation with my mom. We were talking about some people's life insurance, and she was saying something like term policy, and I was like, "What does that mean?" And it was something like that when this person turns 70, they're no longer insured, and they have to try to find insurance at 70. I'm like, that's ludicrous. Mm-hmm. Like, who's going to insure somebody at 70 years old? Mm-hmm. What is term life insurance?
All right, so you have basically 2 types of life insurance, just to make it simple. One you have called term insurance. So with term insurance, you get more coverage. And you pay less in premium or your monthly premium. Then you also have what they call whole life, or another word for it is cash value insurance. Okay, with whole life or cash value insurance, it's designed where you pay a high premium, but your death benefit or the life insurance is less. Okay, so when it comes down to term insurance, I'll talk about term insurance first. Term insurance is designed where you are covered for a term, anywhere between 10, 15, 20, 25, 30, 35 years, okay? Now, once the term ends, depending on who your insurance company is with, once the term ends, then yes, that means the life insurance ends, okay? But there's other insurance companies out there, when your term ends, you're guaranteed renewable till you turn age 100. But the goal is, with the term insurance, I also partner up the term insurance with the investing piece. Okay, that's one thing that no one teaches about is investing. So I show individuals how you can invest $25, $50, $100, $250 a month, and let's also have a term policy. So in 30 years, if I put you in a position when that term is going to end in 30 years, I put you in a position where you have $500,000 or approximately $1 million saved in 30 years, would you still need a $250,000 life insurance policy?
Okay, so let's stay there. So What is the benefit of, because it doesn't make sense to me. Like, it doesn't make sense to me. What is the benefit of having term life insurance?
So the benefit of having term life insurance is you get more coverage.
Yeah,
you pay
assuming
less
that
for
you
free.
don't die before the term is over with.
Right. So life insurance is needed if we pass away too soon. Okay. But if we live too long, and a lot of us are living a lot longer, that's where the investment come in place. But since tomorrow's not promised to any of us,
Literally in COVID.
exactly, we'll talk about that as well. Since tomorrow's not promised to us, you got to protect yourself now. So hypothetically, on a term policy, if someone wants $100,000, they're going to possibly pay for every $100,000 anywhere between $35 to $40 a month. Okay. For that same $100,000 in a cash value or a whole life policy, they're going to pay approximately about $100 to $115 a month. So term is a lot cheaper than cash value or whole. And also with term, with the savings that I'm able to save you between the difference between the cash value and the term policy, that is where you put it into your separate investment vehicle.
But if you don't have somebody that has that working knowledge, which most people don't,
Right.
after the term is over with,
And that's a great point. So most agents out there, they don't have an investment license. Okay.
oh, you need a license to do that.
Oh, yeah. Now this is a highly regulated
know what?
industry down there.
You know, that's a nice throw in. All right, Jason, that's a nice throw in.
Oh yeah. I'm bound by the state and federal. So I got state and federal licenses that you got to have. You can't just walk up to someone and talk about let's get some insurance and
I
investment.
mean, we live in Atlanta, so it's not that far fetched. Like, we live in Atlanta.
Yeah. So but yeah, so you get the term and then you invest but to your point, yeah, there's agents out there that since they don't have the investment license, they give them the term policy. So then when the term ends, then the client's going to go up to them and say, hey, well, I am now 70 years old. I can't afford this policy. But if that agent did their part, they should also have an investment in place. Like I said, life insurance is only needed if you pass away too soon.
Okay, so let me ask you this. So, because we're not talking about you, you're a very special case.
Okay.
You're a unicorn. I'm very happy to have you. You're a unicorn. What would be the offset if somebody has a term life insurance and the term ends? What is an offset?
Oh, so when the term ends, then they have nothing.
Literally, that's it.
It's gone. With certain companies, yes, it's done. And it's just like your car insurance, auto insurance. So someone say, well, I paid into this policy all these years. I don't get anything back. It's just like your car insurance, where the only way the car insurance pays out is if you get in an accident. But what if you don't get in an accident?
So basically, it only pays out if you die. But if you don't die, then that's pretty much it.
Right. And if you don't die, then that's it, which is why it's important to also have investments. Because what if you live? So now on the flip side of that, the whole life policy or the cash value policy is designed where you have.
Hold on. Let's finish term, because I want to
right,
get this.
go.
Let's finish term.
All right, let's go
Okay,
term.
so with term, you said that they should find somebody that's an investor. What is the license they should look for somebody to have to be able to do that appropriately?
To do the investment side?
Yes.
They need to have a Series 6 and or Series 63 license at the bare minimum.
Okay, so that's what they should be looking for. And if you get term life insurance, you should be looking for somebody, an agent that has that and working knowledge of
investments. Right. Because to your point, like I said, a lot of individuals know that when the term ends, their mindset is, hey, it ends, I don't have anything. Now, yes, term is cheaper, but their mindset is, okay, at the end of the 30, 35 years, I don't have any life insurance.
So which one would you recommend? Does it depend on like how old you are or how much?
Well, wait,
money
we
you
haven't
have?
got to the second one yet, so I want to finish the first one. I want to make sure that
Okay.
people understand, because I have a person in this situation right now, so I want to make sure they understand, because I don't think they knew that when they got it. It was just like, and then the life expectancy age has gone up, because they got this in 20 years ago.
Right.
So the life expectancy age has gone up. I don't think they plan to live this long. So now it's just okay. Well, this ends in 3 years, and I'm 70. And who's gonna? Because the older you get, the harder it is to get insurance.
And it's more expensive.
Exactly. So I'm like, okay, well. So at this point, I want to make sure that people who do get term, because you said it's cheaper, right?
It is cheaper.
It's cheaper, so people are probably more prone to go for what's cheaper, because, like you said, it's like car insurance. I don't want to pay $500 for my car. So
it's more expensive for an older person to pay for life insurance than a younger person.
yeah, because the likelihood of them dropping dead
Right,
is higher.
I mean, I get that,
Right.
but it's like somebody my age is more likely to, God forbid, die in a car accident speeding.
Yeah, but
than
not
somebody-
compared to a 70-year-old who has bad health.
I think that there's, I don't know.
That doesn't make
That's
sense
just
to you?
me. It makes sense, but it just seems a little, I don't know.
Well, remember the objective to me is that insurance companies don't want to pay out. They they want you to pay in especially with term.
Yeah. So, and my agenda is I always want to put people in a position where you don't need life insurance. Okay. So life insurance is needed. Going back to those 3 principles of wealth, life insurance is needed until you save up enough money and until you get out of debt. Once you save up enough money and you're out of debt, you're considered self-insured, and you shouldn't need life insurance. So, because if you have going back to that 30-year term example, and you was asking me what does it cover, and I said the mortgage, education, and getting out of debt. 30 years from now, when that term is about to end, number one, the house should be paid off, as long as you did not refinance it. Okay, your debt should be paid off 30 years from now, as long as you don't create any new debt. The kids should be out the house. Okay, even though I hear they do come back, but the kids should.
You can find out soon enough. You can find out soon enough.
The kids should be out of the house, so the need for life insurance should not be there 30 years from now if you did that first principle, which was also saving.
Now, see, you don't present a whole other scenario. So now the ideology is life insurance is a gap filler until you really get to where you're going, in essence. I've never heard it put that way. You just think that life insurance is something you're supposed to just have.
Right.
But it's something that's supposed to kind of fill the gap that if you die trying to build your dream, then everybody that's in a part of that dream is covered.
Right. And so as we transition soon into the next type of life insurance, I always ask people, what would you prefer to do? Pay insurance your whole life or have cash your whole life?
Is that a trick question? Yeah. I mean, is that a trick question?
Would you rather pay life insurance your whole life, or would you want to be in a position where you have cash your whole life?
I'm gonna take the cash.
I think most people will. I don't know.
Exactly, and that is why we want to put you in a position where you have money saved, where you don't need a life insurance. But since we don't know what may hold tomorrow, that is why you got to get the insurance in place.
All right, I think this might be my last question. Who sets the terms of term insurance, like the span of it? Who sets that?
Yeah, so it's based off of the agent and also the client that is sitting in front of. Typically, depending on the individual, I want them to have enough coverage in place to get them to retirement age around 65, 67. So if someone, you say you're 20? 25. So he has another 40 years before he hits that retirement age. So I will recommend a 35-year term.
But that 35-year term is like the overhead, because in that span, he's building a vision and a dream. So that's just to gap that until he gets to where he's going.
Right. So if someone's in their 40s, I'm probably telling, hey, you need about a 20 or 25-year term. If you're in your 50s, you might need a 15, 10-year term. If you're in your 60s, you're probably going to need like a 10-year term, 10 or 15. Because the older you are, then yes, it does get more expensive, no matter if it's term or whole life.
Jesus. All right, on to the next one. What was the other one?
All right, so another type of life insurance is what they call cash value or whole life. And it's designed where the life insurance policy that they have, it also includes what they call a cash value, okay? And some agents sell it as a quote-unquote investment. Now, keep in mind, for those of you listening, a life insurance was never meant to be an investment vehicle.
I was about to say, that don't even sound right,
Yeah.
but okay.
So with the whole life policy, let's say someone had a $100,000 whole life policy. They're paying about $100 a month, okay? So about $40 of that $100 is going to go into what we call the cash value. The other $60 is going to go towards the actual $100,000 death benefit. Over a period of time, that cash value will start accruing interest, okay? And so as it's accruing interest, let's say over a period of time, they now have $10,000 in that cash value, okay? So the death benefit is $100,000, cash value is $10,000. If the individual wants to use that money in the cash value, they can get it. They can get that $10,000, but they must borrow the money to get it.
So that sounds like a 401k almost.
Almost like a 401k, but if it's supposed to be quote unquote your money, why do you have to borrow it?
That does sound like a 401k. That's kind of how I feel about 401k.
Yeah.
Like, why I have to get money from myself and you penalize me for getting my money?
Exactly. So they got to borrow that money. So let's say they took out that $10,000 and they did not pay it back and they pass away. The family gets the $100,000 minus what they borrowed plus any interest and fees. So where they thinking they're getting $100,000, it may be $80,000.
What kind of foolishness is this?
Well, and that's part of the whole.
Who creates this stuff? Who creates this stuff?
Now check this out, Ricardo. Now, when that person passes away, let's say they never touched the $10,000. When a person passes away, the family gets to pick either the $100,000 or the 10,000.
They pick. They don't get both.
They don't get both. So which one they gonna pick?
100,000. I should hope. I'm sure they need it.
So what's gonna happen to the 10,000?
You tell me.
It goes back to the insurance company.
Are you kidding me?
No, I'm not. So,
Oh my God.
so just so you know, insurance is insurance. Investments are investments. Never merge the two together. So, reason why you want to have term insurance is because with term insurance, you have strictly life insurance, and then you set up a separate investment over here. So, if you have 100,000 in a term policy, and I have 10,000 in my investment account, well, if I need the money, I don't have to go borrow the money in this 10,000 because it's my money. And if I pass away, not only do my family get the 100,000, they also get the 10,000.
And that's on term life insurance combined with investing.
Right.
Okay.
Right. So I tell people when it comes down to your car insurance, can you go to the insurance company and say, "Hey, can I borrow some money?"
You could try.
But they ain't gonna
I
get it.
must say it's not going to end well, but you could try.
Right. So with our health insurance, can we go to the health insurance company and say, "Hey, I need to borrow some money today"?
Yeah, no.
No. And one more thing, with the homeowners insurance, can you go to your homeowners insurance company? Hey, you know what? I need to borrow 10,000. No. So you don't want a life insurance product that you got to borrow money from. And now with the whole life, it's designed where you're going to pay that set premium for your whole life, which is basically up to age 100.
But coverage wise, is it as good as term or it's not?
Well,
as good
it's,
as
like I
term?
said, it's usually more expensive. So that's for saying 100,000, you're going to pay $100 in whole life. Whereas it's term, you're paying $35 to $40. So with that $60 savings, you set up an investment account. And the investment account averaging anywhere between 10, 12, 14% on average.
Okay, I'm trying to. Y'all know me. I'm trying to grapple with all this. I'm trying to process all this. That was a lot. Real good. That was a lot.
Yeah.
So in your your personal opinion, you would veer towards term and investing.
That is correct. Because term, like I said, is a whole lot cheaper. So if someone wanted $1 million whole life policy, they're going to be paying couples of thousands of dollars for that, tens of thousands of dollars. But that same $1 million in a term, you could be paying about $100, $150 a month.
Okay, so just as a sidebar, which I normally don't do this, but I appreciate him. As a sidebar, if you want to follow him on Facebook and stuff, go to Jason Ford.
Yes.
Because this is the man with the plan. That's why he's here today, because I've never heard this stuff, and I'm sure you haven't either.
Yeah.
All right, so let's move on.
Clauses. You want to talk about some clauses?
Yeah, so, well,
No, go ahead.
I'm trying to make sure we build this right.
Let's
Make
build it.
sure we
Okay,
build
okay.
this
Hey,
right.
you know, I'm new here, so I don't know.
No, you're doing great. You're doing great. Let's make sure all right, so we talked about the two types of insurance. All right, so yeah, we can talk about clauses in the contract. So because at the end I want to talk about the process, like when you sit down with an agent, what that looks like, and so on and so forth. So we can skip the clauses. All right, so when you get actually no, we need to build this right. So let's talk about, I want to get life insurance. What should I do?
Okay, so if you want life insurance, then what happens is you find an agent.
Which would be you.
Which
We want to reach out to Jason Ford.
That's
yes,
right.
we
It's
want
me.
to be you.
I'll make sure you have my contact information. So yeah, you reach out to me, and then I'll sit down with you, your family, whoever, and then we're gonna put in a plan in place to show you how much coverage you need in life insurance.
All right, so what should I bring to this meeting? Do I need to bring all my debts? What should I bring to this meeting to be properly prepared?
Just you. That's it. And I'm just gonna ask you basic information that you should know.
I about to look. Keyword is should.
Yeah, you should know how much it costs to pay off your house. Now, if I'm dealing with someone and they say, "Well, Jason, I don't own my home. I'm actually renting." Well, then I would say, "Well, God forbid if something happens to you, I don't want your surviving family members to worry about paying rent or mortgage ever again." So, if you were looking to purchase a home, what price range would you be looking at? And whatever they tell me, I'm going to include that in their life insurance plan. So they can have their debt, because that's another thing I coach people on, how to get out of debt within 3 to 5 years. That does not consist of any loan consolidation or filing for bankruptcy. But yeah, they can come to the table with debt. But to be honest with you, seriously, they just come to the table with themselves, and we're going to put their financial game plan in place.
Well, I'm asking because, like I said, you're the unicorn. So most people are not. I mean, now they can get to you because we shared your information. But if I don't meet you,
Okay.
I want to know, like, how
Okay.
should I
Yeah.
gauge my
Yeah.
meeting with an agent?
Yeah, so you need to know how much debt you have. So because people think, well, when I pass away, my debt's going to go too. That's not the case. So you
Really?
want
That's not the case.
Yeah, so you want to
Damn.
no. So you want to know how much debt you have. You also want to know how much you owe on your home, and if, like I said, if you don't own and you're leasing, how much that's going to cost.
Okay, wait a minute. Let me ask you a question. Student loan debt. When I die, that passes on to my family?
It depending on if it's and a cosign on it.
No, I had no cosigns.
Okay.
Thank God.
Yeah.
So when I die, my student loan debt dies with
It,
me.
it should, but there's some situation where it will pass on to your estate.
Jeez, what?
The state.
God, estate.
Estate.
Uh-huh,
Okay,
estate.
okay.
Yeah.
Okay, carry on.
Yeah. So then I also, if they want to send their kids off to college, now, yeah, I graduated magna cum laude from Florida A&M University.
You just had to throw that in, huh?
Yeah, I had to throw it in
As a sidebar?
because I tell my girls, yeah, even if they don't go out of state like I did, make sure you have enough in education so they can just go local. You can still get the same degree local. So you want to make sure if you have an out of state or you know your kids want to go to a certain school, make sure we have enough money covered in that life insurance plan. Okay, and then finally, if it's a husband and a wife, and now one of them passes away, and that surviving spouse may need some extra income to take care of the kids. So we want to also calculate how much extra a month you would need extra on top of your current income to take care of the kids now that your spouse is no longer there. Okay, and then those are some of the things come to the table. Now, with the single parents, what I'm finding out, you have a lot of single parents when they pass away. Most of the times they say, well, my parents, which would be the kid's grandparents, is going to have to take care of the child. And so I asked the question, okay, is your parents currently working or are they retired? Well, they're retired. Well, will they have to go find 2 or 3 extra jobs and now take care of your kids because you're no longer here? I think so. Well, we need to have enough life insurance in place so that your parents don't have to go find 2 or 3 jobs and now take care of their grandkids.
Oh, Jesus.
And these are things we don't really think about. I know a lady that when she passed away, no life insurance in place. She had 4 kids, and when she passed away, all 4 of her kids went into 4 different directions.
Jesus.
Because not one family member could take care of all 4 of them.
How does that work? Or how did that work?
Oh, I don't know.
How you give an example that you don't have the ending results to?
I don't know. I don't know how I end up playing out, but that's what happened.
Okay, so let's do a quick recap because there were like 4 areas that you highlighted. So it was mortgage and living. What was the other one? What was the other one?
Debt,
Okay, you know your debt,
education,
education.
and extra income. If you need extra income, if that surviving partner or spouse passes away.
So a good agent should kind of ask these questions.
Yes.
I mean, look, let's not split hairs here now, Jason. A good agent.
Oh
should,
they should. They should.
But if they don't, these are things I
questions-
should say to them.
There you go.
That I'm looking to get a policy that will cover my mortgage, that will
There you
cover my children, that will cover somebody having to take care of my children,
Right.
and cover my education, my
you
kids'
go.
education.
There you go.
All right, bye. So you heard it. Those are your 4 focal points. If you don't get a Jason, now you should go to Jason. But if you don't go to Jason, when you sit down with an agent, this is how the conversation should go.
That's right.
All right, so after we're done with all of that, and they ask me all these questions, they're going to say, hey, we found this policy, or they're going to give me options. We found 5 companies that are going to...
Right. So then we'll give them a quote, and then we'll pair them up based off of their quote and how much coverage they need. So once I do the analysis and say, hey, well, you need $250,000, $300,000, we'll just do a quote to see how much that is a month. And at the end of the day, the goal is to get it in their budget. Okay, so we'll make sure it's in their budget. If it's not, I'd rather you have something than nothing. And then that's it. And then they'll put in the application to see if they can get insured. So with the application, it goes to the insurance company underwriter. And the underwriter is going to review their clients, what they call the MIB, which is the Medical Information Bureau. So anytime a client has been to the doctor or filled a prescription at a drugstore, the underwriter can review that to see if possible they can insure you immediately, or if not, they may have to request for your medical records or depending on how much coverage you need, there may be a physical required.
But there are some policies that don't. You don't have to go through that, isn't it? Because
Right,
like on jobs and stuff.
Right, exactly. Well, we can also segue to the job stuff. But yes.
Well, I guess we might as well go that way.
Yeah.
So while we're talking about that, there are other policies that don't require that
Correct.
kind of stuff.
That is this other policy that doesn't require you doing any type of physical, but they will pull your MIB, which is the Medical Information Bureau. Now, when it comes down to the job, so I talk to people and they say, well, I have life insurance on the job, which you do, but the challenge with the policies on the job is a group plan, okay? So the moment you leave your job, they let you go, or even you retire, you're no longer part of the group, therefore you don't keep the group benefits. So I'm big on financial independence and not being dependent on the employer. So you don't want to wait till you work 20, 30 years at a job and now you retire, you have no life insurance, now you're 60, 70 years old, who's going to insure you? You want to get it outside of the job. And if you ever go to your employer and say, hey, can I get a copy of the life insurance contract? They're not going to give you a copy of the contract
Because
you don't own it. They're going to give you a certificate, and the certificate is going to state you have X, Y, Z, 1 time, 2 times, 3 times your salary in life insurance. But since you don't see the fine print in that particular contract, you don't know ways they'll find not to pay death claims.
Okay, pause there because that's where we were going to go next anyway. All right, so once you're done with this, you get a quote. Do they give you a contract that you're supposed to read that tells you all this stuff?
Absolutely.
All right, so we're here. So once you're done with this, we've done the process. We sat with the agent. We found the policy for me. We've done it. He prints out or emails me this contract about how many pages?
It might be like 30, 40 pages.
30, 40 pages. But you know what? You're in luck today because what we're going to do is Jason's going to tell us some clauses that you should be looking for in this contract.
All right. So some clauses you have in the contract, one is what they call an act of war or act of terror clause.
Which is disgusting. We talked about it before. It's absolutely disgusting. McCarran, I'm sorry.
So what that means is, during 9/11, you had the situation with 9/11, and the moment that the president came on the news and said that was an act of terrorism, that immediately allowed several companies, insurance companies, off the hook for paying any death claims because they had a clause in their policy that said if it's act of war or act of terror, we don't have to pay.
That's disgusting.
Now, it's not all insurance companies, but there's some insurance companies, they got that clause.
I feel like you want to give a name with some
No, I'm
insurance
not
companies.
gonna do that. I'm not gonna
You
do that.
sure you
No,
don't want to
no,
do
I'm not
that?
gonna do
You
that.
sure you don't want to do that?
No, I'm not going to
You
do
can
that.
tell me after. You can tell me after we get off the mic.
And then they also have what they call here we go, during Hurricane Katrina. You had people pass away during Hurricane Katrina, and several insurance companies did not pay the claim because they said that was due to an act of God. And they got a clause in their policy, if it's an act of God, we don't have to pay.
Oh, good Lord. Okay,
Yeah.
so act of God is like a flood.
Whatever they probably deem act of God.
Okay, now, so on the adverse side of this, is there a way to petition to say we had something happen, but it wasn't an act of God? But you're saying it is, but we're saying it's not.
Right. That is why you want to read that contract, because you want to be able to, your family, when you go to bed at night and God forbid you pass away, you want to make sure that insurance company is going to pay the claim. So if it's got all these fine prints in there, then I would probably look for another insurance company. Okay. And not only that, you have some people, and I forgot to bring this up, but there's some people that they don't have whole life, they don't have term, but they do have what they call accidental death and dismemberment.
That sounds morbid. What is that?
Okay, so accidental death and dismemberment, people think it's life insurance. But with accidental death and dismemberment, the only way that policy pays out is if the individual dies in an accident. Okay? And you must die within so many hours of the accident, and it's in the fine print of the contract,
Oh, my God.
so many hours of the accident before it pays out. Okay, so I know a lady who had 5 accidental death policies on her husband.
5.
It was 10,000 here, 10,000
So
here.
what is he? What is he?
Yeah.
Accident prone?
Yeah.
What the?
Well, he died of a stroke. That's not an accident.
Oh my!
So-
Who would sell you something like that?
Well, there's agents out there that will. And you have some agents that sell you things because they worry about how much money they're going to make.
Yeah.
Okay, that's one way. And then you got others that they just sell whatever their supervisor or managers tell them to sell. 9 times out of 10, they don't know what they're selling.
Well, but how would you spin that to somebody to get them to? I'm just curious. I would have to hear that.
Yes,
Like,
yeah.
how? Okay, Karen.
So at the end of the day, she ended up having to do a GoFundMe, and we don't. That's one thing I'm also sick of seeing in our community as well. Are GoFundMe and GoFundMe? It's not a life insurance plan because we'll put insurance on everything. We'll put insurance on our cars, our homes, our tablets,
Our cell phones.
our cell phone. We got Christmas coming up. I guarantee you, people are going to put insurance on the packages they're going to send through the mail. But when it comes down to our life, why is that something we don't do? Okay, we got to protect our most important asset, which is us. So, and I know when we talk about life insurance in our community, we don't want to talk about it because a brick wall goes up because we don't want to talk about dying. So I usually don't even use the word life insurance. I'll use the word income protection. What do you have in place to protect your income? Or you want to call it paycheck protection. If your family's dependent on your check the 1st to 15th, however often you get paid, what do you have to protect that they'll see it for the rest of their life? Now they're not thinking about life insurance. They think about, oh, he's right. He's talking about income protection. So, yeah.
Okay, so we talked about, what are some other clauses? We talked about the first one, the accidental and...
Yeah, those are, and then you also have some policies, depending on what type it is, they do have what they call a lapse clause, where, and it's more of the different types of cash value or whole life, where if you don't have enough cash value inside that policy, you're going to be still paying a premium on it every single month, but then it's going to actually lapse because you don't have enough cash in there. But that's a little bit more detail that I'll have to sit down and share with people. And at the end of the day, I also do free consultation. I mean, if you have a policy already in place and someone wants me to look at it just to explain what they actually have, I'll do that.
All right, so let's shift. Were those all the clauses? It was just that one?
Oh, well, since we're in COVID season.
I'll go shift to COVID. So
Okay,
we can shift.
Okay.
Let's pivot to COVID. So
Okay.
in the COVID season,
Yeah, so with COVID, you have some insurance companies that if you test positive for COVID, you are uninsurable for at least 90 days, okay? So even if you try to go get life insurance, they're going to deny you because you tested positive for COVID. You have to wait after you got a negative reading and then wait 90 days to see if they will insure you. Now, there's a possibility they still may not insure you because with COVID, there's still so much going on and the unknown, they may or may not insure you. So while you're in good health, you haven't tested positive for COVID, now is the time to make sure you get life insurance in place. Because if you test positive, that information is going to show up on your MIB. So any insurance company, when they look to try to insure you, it's going to show, oh, you tested positive for COVID. And they may just say, well, we're not touching that. We're not going to approve you. You're uninsurable.
okay. What?
Look at Kyle.
Okay, so I mean, if I test positive for COVID and then I want to, go get life insurance, what am I to do now if nobody is approving me? That makes no sense. I was y'all saw me processing that.
Yeah.
Well, I mean, it makes sense because their objective is to not pay out.
They
So
get
that,
that,
anything
because they know since they don't know the unknown, they try and think, what's the likelihood that I may have to pay this out in the next 2-3 weeks?
Okay, I guess I'm thinking about it morally instead of
we talking about business.
business-wise.
No,
Yeah,
we talking about
yeah,
business.
insurance
We talking
is a
about
business.
business.
Yeah,
Come on,
yeah.
Kyle. We're talking about business
Yeah,
here.
yeah. The idea is for them not to have to pay.
Literally.
But if they see that you are a potential health and they have an idea that you may pass away real soon, they're not going to approve you.
That means money out of their pockets. They don't want to do
Yeah.
that.
Yeah, I get that. So it doesn't matter the severity of of your COVID.
If you test positive, there's an insurance company out there that they're not going to touch you until you have a negative reading. You still got to wait, and they still may not approve you, even with the negative reading. Yeah. Oh, I know what I forgot to add about the clauses.
I knew it was more than one.
Yeah, it was the 2-year contestability.
Yes.
Okay. Yeah, so when it comes down to the life insurance policy, all insurance companies have what they call a 2-year contestability period, which if you pass away within your first 2 years, they can contest that policy to see if they even have to pay out. They want to make sure, number one, you didn't die due to foul play. You didn't die from suicide. They also will probably pull your application to make sure you did not lie to any of the preliminary medical questions. It may be some situation where you told them that you're not a smoker, but then when you passed away, they did some tests and found out you are a smoker. That will cancel you getting insurance because you lied on the application. So in the first 2 years of you having a policy, it is contestable with the insurance company.
For the slightest thing.
For the slightest thing. That's why you must be truthful and honest. So if someone say, hey, did you test positive for COVID? And you say, no, I ain't test positive. But they pull your MIB and they show you did, and so having you pass away within that 2 years, they're not going to pay. They may pay, but they don't have to pay because you lied in the application. Now, after the 2 years, it's not contestable, but the first 2 years is contestable.
Okay.
This is a lot to digest, but it's good. I mean, I'm retaining a lot of information here. So when do you, I'm 25, like I said. Because I think I still have life insurance under my parents. What age do you think is an appropriate age for me to get my own?
Right. Yeah. Around 25, you definitely need to get your own policy that you own. And especially if, you want to get it now. Get your own policy. Because on the policy that your mom owns or your parents own, there may be someone else that's the beneficiary. But let's say you get your own policy, you may want to leave that money to someone else versus who your parents is going to receive the funds from because they own the policy on you. So it's best that you get your own policy. Yeah, age 25 is a great time. And with you being so young, it's going to be cheap.
Yeah. Okay.
Yeah.
That look on your face.
It's
I don't think I've ever seen that look on your face. Like it's a bombarded look.
that's accurate.
That I've never seen that face. All right. Jesus. I'm trying to think. All right. So it's 12:50. We have about 10 minutes left. I think we're gonna have to do a recap. Just in a small detail. All right. So let's do a recap. So policies. The difference between term and whole.
All right, quick. So term, it has an ending. Anywhere between 10 to 35 years at the end of the term, depending on the insurance company you're with, you no longer have insurance after that term ends. Other companies, you're insurable, guaranteed till you turn age 100. Then you have what we call cash value or whole life, where it builds a cash value inside the policy. You're going to pay that set premium for your entire life. If you pass away, the family gets to pick either the death benefit or the cash value. They don't get both. They get one or the other. Okay. I'm big on having term and then outside of the term policy, set up an investment account.
And that agent should have what kind of license?
A Series 6 and 63. Okay. So that's a little recap.
Yeah, we're going to keep it real simple.
Yeah,
You don't blew everybody mouth the last hour, so we keep it real simple. All right, when I sit down with an agent, there are 4 areas I should have in my head: education, family, shelter, housing, and there was one more. It was like 4.
So one would be enough to cover the funeral, the mortgage, the debt, education, and extra income. Yeah.
All right, so those are the 5 areas. When you sit down with an agent, you should definitely want to talk about. Contingency, the 2-year contingency. What is that again?
So the 2-year contingency, within the first 2 years, all policies are contestable, just to make sure that the person didn't die via suicide, foul play, and that you didn't lie in the actual application. So don't lie. Be truthful. Okay? That's what it boils down to, because it will come and bite you in the long run.
Yeah.
And then your family's going to be devastated because they're thinking, hey, I thought I was going to get X, Y, Z when you pass away, but we noticed that you lied in the application.
Yeah, you'll be gone, so they can't even beat you up or
You're
fight
right.
you about that. It'll be over. You'll be gone.
They're going to be upset.
That's the thing. All right. Clauses that they should look for in the contract once you sign up for it.
So you want to check look for the act of war and the act of God.
Are those 2 different clauses? They can be tied together.
They're 2 different.
Okay.
And the act of war, act of God, and what was the other one? Oh, the lapse clause. If you don't have enough money in the cash value, how the policy will lapse.
Explain that again.
So what the different types of, there's different types of whole life policies, but they have one type where if you don't have enough money in the cash value, then your policy will lapse, meaning you have your face amount is actually going to be 0. It lapses because you don't have enough cash in there to keep up with the death benefit. But even though you're going to be paying a premium every single month, a lot of people don't realize you're paying a premium every single month. But since you didn't look at the contract, it showed that your policy has lapsed because you don't have enough cash value inside that policy. So I can look at people's policies and tell them to highlight there's certain things you want to look at, and that's in some people's policy. And then we also talk about the accidental death. So you definitely want to make sure you want to make sure you have pure life insurance. So no matter how you die, they're going to pay out.
That just sounds like such a bootleg policy that, hey, you can only die this one way. And if you die this one way, we'll pay you out. But you got to die by accident.
And I could tell you and see some people think they have life insurance with the accidental death because accidental death is even cheaper than term. But that insurance company know the likelihood of you dying in an accident
Yeah, I want to see the statistics. Man. That's probably like 1 out of 1,000.
Right. So don't let the oak tree fall on you. That's not an accident.
Oh my god.
And then saying the clause that oak tree got to fall on you. No, you got to die. More than likely it's like a car accident.
So when you sign up for these policies, are all these policies, the paperwork from these things, like 30 pages long?
Yes, it could be about 30, 40 pages long.
Oh God, that's a trap within itself. People don't read. Well, we don't read, but we don't read like that. So, oh my God. Okay, Kyle, you got any questions? Because
No, just I have. I'm going home with insight, and I'm going to ask my dad questions about my life insurance. He's probably going to not want me to get off of his for whatever reason. I'm
well,
not
like he
sure.
told his dad, if his dad is got it from work, it's probably in a group thing. So he probably doesn't even know outside of what he has.
And you can have multiple. He can have one on you, and then you can get your own policy that you actually own for yourself.
Oh, so you can do that.
Yes.
Okay.
Yeah. So if the parents want to keep that policy that they have for you, you can. But then you want to get one that you actually own.
Okay.
Yeah.
I mean, you're the youngest here. Well, you two
Yeah.
are the youngest, so I mean, y'all should be soaking this up. I'm kind of old, so whatever we gonna do, we better get it done. Anything else you want to leave? Any nuggets you want to leave with people?
Last but not, just remember when it comes down to creating what I call generational wealth. If you follow those 3 principles, I guarantee you create wealth. So if you save and you get out of debt and you protect, you'll be wealthy. Okay, and just know life insurance is only needed if you pass away too soon. But if you live too long, then that's where you want to make sure you have some investment in place. Because the only way someone could benefit off the life insurance policy is if you die. But what if you live? Then what we got to deal with then? Let's say you live to 70, 80, 90 years old. Then what's next? So that's one thing I want to leave. Just know, since we don't know the unknown, you definitely want to get the life insurance because tomorrow's not promised. Who's to say that one day you're driving down the road and some person is texting and driving at the same time and they just run into you?
Well, if you have accidental coverage, then in that case, that works in that case. That'll work in your favor. Heaven forbid that happen. But if you do, and you only have accidental insurance, then you just got lucky. You die by an accident. I just want to say. Also, remember, when he says saving, he's not talking about a savings account.
That is correct. We're talking about investing. And I'll give you, like I said, you can follow me on Facebook, Jason Ford. I'll also give you my direct cell phone number. Well, my other number, 470-588-1961. Okay.
I was going to give you space for that, but since you already did it, how can they get in touch with you?
Yeah, you can get in touch with me there, 470-588-1961. Or you can email me at jasonford@fordassociates.org. jasonford@fordassociates.org. That's it.
All right, everybody. So I think that we all had our mind blown today.
Definitely.
I know I have, and very good information. Just remember that, life insurance, we learned today that life insurance is a gap filler while you complete your dream or your vision. That's the ideology behind life insurance. It's not something you're supposed to ride the wave on until you die. It's supposed to be a filler until you get that nice wealth that he was talking about. And I will personally vouch for him. He is as good as he said here today in person. That's what made me have him on the show. He's that good. So you definitely want to check him out, Jason Ford. He can take care of all your life insurance needs. He'll have to come back and talk about these mutual funds because he's just as thorough with the investing side. So we're going to have to have him come back. So you're no longer a podcasting version. You did it today. You're no longer a podcast. You did a really good job. See,
Right. Thank you. Appreciate it.
So we're breaking people in at the leadership blend. We're breaking them in. Well, you never done it, you're here. So good show. And thanks again to Jason Ford
Thank you,
and Ford
Ricardo.
Associates for
Thank you.
being with us today to really give us an in-depth look of insurance. Now, after today, those leadership blend listeners, if you mess up and you kick the bucket, don't send me your GoFundMe. Because we had a whole show on it. We talked about it thoroughly. We gave you Jason's contact. You have no more excuses because here at the Leadership Blend, we're alleviating excuses. You don't know because you don't want to know. So after today, you understand insurance and insurance policies and all that good stuff. And if you don't, reach out to Jason Ford. So there you have it. Kyle, any final thoughts? Any parting thoughts?
No, sir. Thank you again. You've been very insightful.
You're welcome.
Yeah.
All right, everybody. So we just finished another episode of the Leadership Blend. We will see you next Friday when it's just the Blend family. And we'll be getting ready to do that. Pretty much be our wrap up. We won't see you guys until January. But sidebar, The Leadership Blend Media Company is having our first Christmas special on December 21st. It's going to be powered by Status Network. Go to the website at ricecommunity.com. That's Rice with a W to get all the great details. You're going to see the whole Blend family, from the TV cast that you typically see behind the scenes to the podcasting team, and even my siblings. Yes, my siblings, who are 2 shades of crazier than I am, will be sitting with me on stage. It's going to be an amazing time. We have some amazing singers, from Roosevelt Bowles to Floyd Grant to Deborah Murray to Daphne Hilton. It's going to be amazing. We're going to be singing Christmas songs and all kinds of stuff. So you want to tune in. More information on the website, ricecommunity.com. And we will see you next Friday, same time, same place, on the Leadership Blend live podcast with your host, Ricardo D. Rice.